amendments that came by this time around, and get in Bhavesh Jain, co-head of factor investing of EdelweissMF. Now remember, there's been a hike in security transaction tax on F&O trades. So while we have spoken about stock-specific issue and how it would impact some of the companies, let's understand how it would impact one category of funds, which is arbitrage funds. They do have trades in F&O because they try to make profit from the differential in pricing in the cash and the futures market. Bhavesh, thank you so much for joining in today. If you can explain to our viewers, if they're investing in arbitrage funds, what is the current yield that they are earning and how that return would be impacted once the STT hike kicks in?
Yeah. So hi, good afternoon. Thank you for this opportunity. So right now you will see for arbitrage fund, for whatever trades we do, almost out of the 100 rupees we have in AUM, 70 to 75% is in arbitrage position. Now this position gets rolled over every month. Earlier, the cost of STT was around 2 basis points, and now that has gone to 5 basis points after yesterday's changes. Though it is effective from 1st of April, but just to give an hint, the cost will be up by 3 basis points, roughly 70% of our portfolio. So 2 basis points per month. So effectively, the annualized impact will be around 24 basis points for rollovers. Plus, we also do some fresh deployment, some churn, which happens during the month. That will have an additional cost of around 6 to 7 basis points. So broadly, the impact should be around 30 to 32 basis points. But it is like normally you will see whenever the cost of raw material increases, we pass on some of this cost. So similarly, the STT cost has increased for us. So we will also try to pass on some of this cost. When I say pass on this cost, we will increase our demand for rollover. So normally, if I'm rolling over my stock at say 50 basis points, now we'll ask a 51 or 52 basis point, so that at least a partial, you can say, impact of this STT hike is taken care of. But all said and done, as of now, on a steady state basis, we feel there will be an impact of almost 25 to 30 basis point on return of arbitrage fund. So normally, if you will compare return of arbitrage fund with liquid fund, say assuming both of them are giving you 7% return, earlier the benefit of you can say arbitrage fund over and liquid fund post-tax was almost 120 basis point. Now 30 basis point out of that will go away, assuming we are not able to, you can say, improve our return to that extent. So now that gap between liquid fund and arbitrage fund on a post-tax basis will be 90 basis point. So still it is a better opportunity compared to a liquid fund on a post-tax basis. So we don't see a meaningful impact on the flows of the category. But yes, incremental returns are getting impacted, and we have to just, so at least for next 90 days, nothing is changing because we have already rolled over our position to February to March, and March to April rollover will also happen before 1st of April. So no impact till April of this year. But after that, once we start rollover from April to May, we will definitely see some impact of these changes on overall return of arbitrage fund. And This is not only limited to arbitrage fund, it will have some impact on balance advantage fund, some impact on equity saving fund, some impact on our SIF, which is Saltiva Hybrid Long Short Fund. Though the impact will be much smaller in this fund, but yes, the cost will have some impact on all these hybrid products.
Right. Bhavesh, thank you for explaining that very clearly for us. Well, a couple of quick pointers. So you said that a certain portion of the increase you will be able to pass on. So a certain portion you may be able to absorb, and you've given us a reason, or you've given us a quantification of how much that could be. The other question is, a couple of traders that we spoke to actually mentioned that there could be an offset in terms of using options instead of derivatives. Now, for an arbitrage fund, does that option exit, or will you have to go ahead and continue working in the same way, in the derivatives or in the futures market?
Yep. So for arbitrage fund, so all the arbitrage fund under the mutual fund space, there is no alternative to trade single stock future. We cannot trade derivative options in arbitrage fund. So that's why that option is not available to arbitrage fund. But yes, for, as I said, some of other hybrid funds like Quantifying Hybrid Long Short Fund or maybe Balance Advantage Fund, we can use some options and try to, you can say, in a way, reduce our impact. But anyways, over there, the impact was much, much smaller compared to what it is on arbitrage fund.
take that point. So the short point is the impact could be anywhere between 0.3 to 0.5%, going by the exposure you have to futures position in a fund. But as you said, Bhavesh, it will not see a big impact. Still 90 days to go for this applicability to come by for arbitrage funds in particular. So we'll watch out for what kind of pass on some of these AMCs take when it comes to these hybrid funds. Thank you so much for joining today and explaining to us with example what this would mean for investors in hybrid funds. With that, we'll slip into a short break. When we come back, we'll get you more on the markets and stock-specific action on the other side. Stay tuned for that.